What the hell is going on, guys? So today I want to give you guys an update about my Fundrise account. So some of you may or may not know, this is my third video about Fundrise. So about a year ago, June 13th, 2017, I made a video about me investing $1,000 into Fundrise. And about 2 or 3 months ago, I had my most hated video of all time uh, that I've made, of the 100 or so that I've made. Um, about how I will never invest in Fundrise again. And in that video, I mostly talked about the features about Fundrise that I didn't like. So I'm not saying that Fundrise for some people isn't a good investment. I just was thinking for me, it wasn't a good investment. And the reason being, and I've slightly changed my point of view of this over the past 2 months, is in early June, Fundrise took a lot of my advice about what I thought was wrong with their platform. Now, I think they have a great user interface, and I think I said that in my last video. They have a great user interface. They're able to show you a decent amount of items, but at the end of the day, what they don't show you a lot of is their investment returns and what exactly they're getting per property and what their projected income is and status updates per property and whatnot. And I believe on June 6th, early June or so, they've really updated basically just that. So the other issue I had was basically the lack of liquidity. And so I've been somewhat informed by others that they have changed that. So I think what it is now is it's either 2 or 3% if you pull out within the first 2 years, and then it goes down 1% thereafter. And then after you have your money in for 5 years, basically there's no issue to selling your assets. But back to what they changed and why Fundrise really listened to what I said. So I don't know if they had somebody scoping my videos out. I have a small YouTube channel, so I doubt it. They probably just were working on getting the platform up and running before they were worrying about individual things. And it's also a relatively newish platform. But one of the cool things is if you look on this risk-adjusted return, and so I guess let me take a step back. Fundrise was always very good about saying, okay, are you going for appreciation? Are you going for cash flow? Are you going for balance? And so their aim was basically anywhere between 6 to 12%, of which it would be balanced between appreciation or dividend income or cash flow income, what have you. So I kind of went the balanced route, so that meant kind of one of either down the middle. So a little bit of appreciation, and then some of the things that I invested, I guess, are more focused towards cash flow. But what I ended up not really seeing was the actual things that we were investing in, which ended up being a lot of single-family homes, like you see here, and not seeing any of the returns. So the problem I had was I was assuming that Fundrise was really investing in multifamily complexes, similar to Camden Property Trust, which is the place I live at, Post Properties, or something like that. And in all reality, then they start lending out equity lines of credit and equity loans and construction loans, which at first I was pretty upset about, but they've actually started completing some of those, and they actually turned out pretty good. So now it looks like every single one of these projects that show up on this right hand side is risk rated from A to E, and they always had that, but they never really showed what the potential return was on each individual item. All they would show is, hey, we invested in a B class property in San Marcos, Texas, or we invested in a C class property in Atlanta. And so now when you actually look at it, it shows what the actual projected return is per property, what the ranking is in terms of risk, and all things considered like that. So now that I've invested for just over a year, I've seen about a 5% return, and I'm supposed to be getting a dividend next month or so. But the real cool thing is now they're actually showing one of the things I was most concerned about, which they're giving these progress reports. So they're talking about what they've actually made in 24 months, on a specific project, and now they actually have completed projects here in Austin. And this is the type of stuff that I was really gunning for. And now the only problem that I really have with Fundrise is that ability to be liquid and be able to pull out your money within less than 5 years. So I can't really fault them at that anymore because at the end of the day, they are trying to keep um, money invested so that you don't have people buying and selling as things kind of come in and out. Because real estate as a whole is a somewhat illiquid investment. It takes months sometimes to be able to sell an investment. So it's not very easy, to buy and sell because they're taking the money that you invest with them and actually investing it into real properties. Whereas if you were to invest like a stock real estate investment trust, then you're just purchasing a note on paper, and it's not real investments that you're buying. Um, but what I really like is, like I said, I made my first complaint in April, and then in June timeframe, they started writing these progress reports, and they're really cool. I really like them. I get emails directly to my personal email account talking about, we sold X, we sold Y, and so okay, yeah, here you go. June 5th is really when they actually started doing this recent activity feed sort of mentality. And so I really like that. And I guess my real problem is now is, well, I guess I really don't have a problem yet. Uh, and I might consider, now that there's actual percentages are starting to show up and they're giving progress reports on some of these items, I feel a lot more comfortable investing in the platform. But uh, I still think I might invest with larger companies like Realty Income Corp because one, they're liquid, which isn't that big of a deal, but two, they're going after triple net leases, which means that they're very low risk. So they might be low returns but low risk. They have a lot larger of a future, or sorry, not future, but a lot larger of a past of dividend increases. Um, and anyway, I really like that. Now, the thing that I would be more excited about is if Fundrise was strictly going to invest in multifamily properties, because those, in my opinion, are the best in terms of cash flow and being able to turn around rather quickly to be able to get a profit. Not saying that these guys haven't been doing really well with respect to profit, um, but you know, my I guess my goal is if I wasn't to invest in uh, stocks or real estate investment trusts, and I would actually use the money like I have in Fundrise to purchase real estate would be to purchase large 300, 400 unit apartment complexes, kind of like this one that they built here in Austin. But what I've seen more so of, and it might just be the fact that I'm invested in, different type of, um, specific, I guess, assets, um, which doesn't really make sense, I guess, because I'm spread across, I guess, 5 or 6 different ones. But I would anticipate that there'd be more multifamily that I would be getting involved in, but in all reality, it's more single family. And there's nothing wrong with buying single family homes. I just think if you're going to put effort and whatnot into realizing a deal, there's a lot more economies of scale. There's a lot more ability to leverage leverage multifamily properties rather than single family homes. Anyway, the reason why I probably say that is because I'm a large follower of Grant Cardone and things like that. So buying single-family homes, while it's not a horrible idea, and I think that there's investment there, and a decent investment at that, I think that the main purpose of a single-family home is for a person to live there and not necessarily rent. Um, if people want to be in a single family home, they're more so going to be looking to buy and live there long term rather than rent it out. Whereas people move into apartment complexes, and the reason why they do that is because they're going to be renting. They don't plan on owning the apartment complex that they're living in. So the best use, which is sometimes what people talk about in terms of in like Robert Kiyosaki's books and Grant Cardone, the property that you're investing in, you need to look for the best use, and of that, multifamily has the best use being rented, whereas single family home has the best use of being owned, which is why flipping is a lot better of a business than single family homes or whatnot. And anyway, I'm rambling, but glad to see that Fundrise really took an idea that I had, whether it was knowingly or unknowingly, most likely unknowingly, and really put a real big piece of transparency into their platform. I'm looking forward to seeing how this continues. If I get into the 7.5% range, like I said, I invested about a year ago, but my dividend comes in next month. But if I get into the 7.5% range, I might, throw a couple $100 at this a month and really see how it continues to grow. But for the time being, I'm really just sitting on my cash and investing in other projects like app development and whatnot. And if you're curious, feel free to write down in the comments, and maybe I'll have a conversation with you about it. But anyway, glad to see the Fundrise is making a little bit of a change. I'm much happier with my small investment of $1,000. I'm more concentrating on the other investment of $250 or so thousand that I have in the stock market rather than this $1,000. But anyway, glad to see that things are moving forward. And anyway, I'll catch you guys around for another video. Thanks for chiming in. And if you haven't already, don't forget to subscribe and hit that like button. I'll talk to you guys later. Take care.